Trading is inherently stressful, but that's not what keeps me up at night. I'm confident I can weather the storms that are coming, but I worry that many do not see the brewing cyclones over the horizon. I listened to a podcast a few days ago with Robert Breedlove and Brandon Quittem called Bitcoin's Role in the Fourth Turning. Smart guys. Wise info, but wrong conclusion. Well, sort of. My profession gives me a more granular view of the same landscape they're analyzing. I see myself as a navigator, someone who gathers all available information, uses every tool at hand, and charts the potential outcomes of the future, measuring their impacts in dollars. It's a cold calculus, often devoid of emotion and humanity. For instance, when millions are expected to die in third world countries due to food shortages, the logical move is to buy wheat futures and profit from it. To many, this might seem grossly insensitive, and I understand that perspective. But my primary obligation is to my members and my family to be a provider. Not making that money won't change the outcome, won't help the cause, and certainly won't put food on their tables. This is just the reality we face. There's a mission, a moral obligation to make money, which means I must remain vigilant. However, the more I pay attention, the more the market sends me dreadful signals, and the more I worry. I used to spend my downtime researching and then catching up on politics via YouTube. Now, after my research, I turned to stand-up comedy or comedians' podcasts. Why? Because I need a balance. I need a laugh after delving into the chambers of dread that are the clear indications of a fourth turning. So, for my small audience, let's break down what a fourth turning is, with some help from GPT-4o. The concept of the fourth turning comes from the generational theory developed by William Strauss and Neil Howe. According to their theory, history unfolds in a cyclical pattern consisting of 4 distinct periods, each lasting about 20-25 years. These periods, or turnings, represent different phases of societal development and are driven by generational archetypes. Here's a breakdown of each turning. First turning, the high. The first turning is a period of strong institutions, collective optimism, and societal rebuilding following a major crisis. Society focuses on community and collective achievements, often leading to economic prosperity and political stability. The most recent first turning occurred during the post-World War II era, from 1946 to the early 1960s, characterized by economic growth, suburban expansion, and a general sense of unity and purpose. Second turning, the awakening. The second turning is a time of spiritual and cultural upheaval, where society shifts its focus from collective progress to individual expression and questioning of established norms. This period is marked by a growing desire for personal freedom and a reevaluation of societal values. The last awakening happened during the 1960s and 1970s, exemplified by the counterculture movement, civil rights activism, and widespread social change. Third turning, the unraveling. The third turning is characterized by the weakening of institutions and a rise in individualism. Society becomes more fragmented, and public trust in institutions erodes. This period often sees cultural wars, economic instability, and a general sense of pessimism about the future. The most recent unraveling began in the 1980s and continued into the early 2000s, marked by growing political polarization and the breakdown of social consensus. Fourth turning, the crisis. The fourth turning is the climax of the cycle, a period of crisis where society faces existential challenges that often result in significant conflict or transformation. During this time, old institutions are dismantled, and new ones are built in response to the crisis. The outcome of a fourth turning can either be the destruction of the old order or the creation of a new one, leading to a rebirth of society. According to Strauss and Howe, we are currently in the midst of a fourth turning, which they argue began with the 2008 financial crisis and is expected to continue into the early 2030s. This period is marked by significant global challenges such as economic instability, geopolitical tensions, and societal fragmentation. Understanding these cycles helps to anticipate the challenges and opportunities that may arise as society moves through these phases, ultimately shaping the future based on how we respond to the current crisis. In the Bible, the book of Revelation represents the ultimate fourth, turning the end of all ends, but it can also be seen as a reflection of patterns that have consistently emerged throughout history. While I walk GPT through a more recent telling of this cycle, these cycles can be extrapolated to any period in history where the distinct turnings can be properly identified. In their discussion, Breedlove and Quittem explored the relationship between these cycles and generational dynamics, particularly how new generations rebel and disrupt societies and the global climate. They accurately delved even deeper into the inherent human yearning for cyclical transitional periods of order or chaos. As Dostoevsky poignantly observed in Notes from Underground, "Shower upon him every earthly blessing, drown him in a sea of happiness, so that nothing but bubbles of bliss can be seen on the surface. Give him economic prosperity, such that he should have nothing else to do but sleep, eat cakes, and busy himself with the continuation of his species. And even then, out of sheer ingratitude, sheer spite, man would play you some nasty trick, simply to introduce into all this positive good sense his fatal fantastic element." This encapsulates the idea that even in a perfect world, humans would still seek out or create chaos, driven by a deep-seated need to disrupt and challenge the status quo. Given our nature, heaven may never exist on Earth, but hell certainly can, and various forms of it have. The reason these fourth turnings occur is that the generations who fought to establish order are no longer present to prevent the chaos that once created those hells. While we typically remember the disasters themselves, we often forget the events that led to them, unwittingly recreating not exact replicas, but echoes of the past. History does not repeat itself, but it often rhymes. The famous line from the great Mark Twain resonates deeply with many investors today. Twain possessed many of the traits of a great trader, yet in life he was a poor investor, having to declare bankruptcy in 1894. But who can truly fault him? He lacked the historical insights and tools that we have at our disposal today. Nevertheless, this quote has become a cornerstone of what investors are taught when analyzing major economic or geopolitical events. It establishes the foundation for understanding the significance of history, while also allowing for the nuance required to recognize that today is not yesterday. It's a delicate balance to maintain, and in my profession, that balance can be the difference between poverty and millions. So why are so many crossing that line and betting big on disaster? And where are those warning signs most evident? Let's start with the second question. Conquest, disease, the rise of authoritarianism in countries around the world, coupled with the economic destabilization caused by the COVID-19 pandemic, have destabilized the global world order we have flourished in post-World War II. Authoritarian regimes have gained strength in recent years, with leaders in countries like China, Russia, and Hungary consolidating power and undermining democratic institutions. According to reports from organizations like Freedom House, global freedom has been declining for over a decade, with 2023 marking the 17th consecutive year of this trend. The pandemic further exacerbated these issues by destabilizing economies, increasing government control, and widening the gap between rich and poor. The economic impact of COVID-19 included a sharp rise in global debt, an estimated 97 million more people living in extreme poverty, and significant disruptions to global supply chains, which have contributed to ongoing inflation and economic uncertainty. War. As of 2024, there are a significant number of ongoing conflicts around the world, with different sources reporting varying numbers due to the complexity of defining and tracking conflicts. According to the Uppsala Conflict Data Program (UCP), a record 59 state-based conflicts were reported in 2023, the highest number since data collection began in 1946. Additionally, the Peace Research Institute Oslo Prio noted that the past 3 years have been some of the most violent since the end of the Cold War. Famine. The risk of famine has escalated sharply. The World Food Program (WFP) reports that over 345 million people now face acute food insecurity, up from 135 million in 2019. The Food and Agriculture Organization FAO states that nearly 828 million people were suffering from chronic hunger in 2023, an increase from 690 million in 2019. Conflict-affected areas like East Africa, the Middle East, and parts of South Asia are particularly at risk, with worsening conditions due to drought, economic instability, and ongoing violence. Much of this has been brought on by COVID and increasing conflicts. Death. The cumulative impact of global crises, pandemics, wars, and economic instability has led to a significant rise in global mortality, with 2023 being one of the deadliest years since the Cold War, recording over 122,000 battle-related deaths. This trend is expected to worsen. The United Nations warns that ongoing conflicts, climate change, and economic disruptions could further increase death rates, especially in vulnerable regions. Projections suggest that without significant intervention, the combined effects of these crises will continue to escalate, potentially leading to even greater humanitarian disasters in the coming years. White, red, black, and pale, the four horsemen of Revelations. While many in my audience may not share my religious views, and may even find them off-putting, I find these metaphors not only poetic, but also deeply foreboding. Am I the only one seeing the writing on the wall? Hardly. Investors are increasingly anxious, and the management of their money reflects that. So far in 2024, central banks have added an extraordinary 290 metric tons of gold to their reserves in just the first quarter, the largest first quarter increase since at least 2000. This follows record-breaking purchases in 2022 and 2023, signaling ongoing concerns about economic stability and rising inflation. According to the World Gold Council, 29% of central banks plan to increase their gold reserves over the next year, driven by financial market uncertainties and crisis risks. Meanwhile, the recent turmoil in Japan, where the unwinding of the yen carry trade caused significant market disruptions, highlights how quickly market mechanics can override investor sentiment. As we've seen, when disaster strikes, it often triggers a sell-all event, even impacting the assets investors most want to hold on to. The rising demand for gold and the chaotic market reactions underscore a broader fear that these crises are far from over, and that the road ahead may be fraught with even greater challenges. Although many, like me, are deeply ingrained in the data and due diligence necessary to see the obvious signs, especially those with the most data, such as the central banks, there still remains a large cohort of market participants who cling to saviors and slogans like "markets go up." The irony of the word slogan is striking. It derives from the Scottish Gaelic Slúg Gairm, meaning the battle cry of the dead. The problem with fourth turnings is that most of the people who would recognize the troubles ahead are either dead or dying. The game of life is behind them. People tend to rely on their lived experiences, but this reliance is precisely what can betray them. The robotic-like incremental buying from the working population's 401k contributions may provide the systematic buying that the populace wishes to see. But it has also given rise to a beast of a market that marches higher and higher, widening the economic gap between the wealthy and the poor, and exacerbating the negative social impacts of that increasing disparity, which remains unaddressed. And surely, before I even write the next sentence, you've drawn the possible conclusion that this game is not infinitely sustainable. Then comes Breedlove's favorite answer to almost every economic dilemma: Bitcoin. This sentiment has been widely echoed by many, with cryptocurrency becoming a popular alternative among the masses. In fact, 1 in 5 Americans now own some form of crypto, a demographic so large that even politicians have felt compelled to respond. Both Kamala Harris and Donald Trump, in their political campaigns, have reversed their stances on cryptocurrency. Trump even went so far as to proclaim that he would halt the sale of Bitcoin and add it to the National Reserve, a bold and controversial stance that could easily warrant its own deep dive on another Substack article. However, the optimism that many express on social media about the future of crypto often overlooks the brutal realities of such a transformation. While a fourth turning may indeed pave the way for a new decentralized currency, the dollar will not be dethroned without a fight, and that battle will come with significant scars. For my readers and members, it's crucial to understand that this will not be a straightforward, parabolic rise. Bitcoin's value is closely tied to global liquidity, and we can already see the impact of tightening liquidity in a deflationary environment on its price action. History also provides a sobering lesson here. During the 2008 financial crisis, assets across the board, stocks, real estate, even gold, plummeted in value as investors scrambled for cash. Bitcoin, which was conceived in the aftermath of that crisis, has never been tested in such a severe downturn. The events necessary for widespread adoption of Bitcoin could very well lead to its collapse first, as global liquidity dries up and investors engage in a sell-all event. Only after the crash, when the dust settles, will investors likely choose which assets to carry into the future. This is the reality of such a significant shift. It's not a matter of if it will be painful, but how painful it will be. However, a market reset is not all doom and gloom. The greatest deception played on younger generations is the belief that a market downturn is inherently bad. The absurdity of maintaining high markets to keep the wealthy richer is laughable and ultimately detrimental to young investors, who are forced to buy overvalued assets. subjecting them to greater risks than older generations ever faced. A reset levels the playing field for those who are prepared. The rise of cryptocurrency, or at least the growing appetite for it, is likely a symptom of the frustrations with the lack of meaningful opportunities in the stock market. Due to regulations designed to protect investors, everyday individuals are barred from investing in early-stage startups where 20,000x returns are possible. These opportunities have been effectively stolen from them, leaving them to buy in only after most of the gains have been made, or pushing them towards riskier alternatives like options and futures in pursuit of wealth generation. This is a travesty disguised as protection. A market reset offers a once-in-a-generation opportunity, perhaps even rarer than that. But navigating the path from now to then is a daunting task, a full-time job, and even then, few will likely get it right, or even have the means to take the opportunity when it presents itself. Then step in the technologists who primarily focus on the domestic economic landscape of the U.S. We are on the brink of great innovations that will increase the complexity and accuracy of forward-looking projections, making the task of timing markets on multi-year timeframes even more challenging. Robotics in the workplace and potentially on the battlefield introduces a form of physical capital with no historical equivalent for comparison. AI offers unprecedented productivity, pushing humanity to confront the age-old question: what is consciousness? Over the past several months, many of my favorite podcasts, such as the Lex Fridman podcast, have grappled with the AI conundrum, leading to heated debates. Will AI be our savior or our ruiner? I can't definitively answer that, but my best guess is that it will be both. Biotechnology, meanwhile, is unraveling the mysteries of biology, allowing us to become architects of the human body. Then there's the critical question of the environment and the energy sources needed to power all these innovations, a topic that generates its own set of complex issues. Although nuclear energy seems like the best path forward, famous or infamous investor Peter Thiel posited on Joe Rogan's podcast that sharing nuclear technology with allies can be dangerous. He argued that when we shared nuclear plant designs with India, it enabled them to derive the means to build nuclear weapons. Given the current global state, will there be the political will to push forward with the necessary energy advancements to power our technological future? At the end of the day, my gut tells me these technologies will only further exacerbate the turmoil ahead, as politicians and key figures debate the roles this new technology should play in our lives. And although the very core of my existence remains a man optimistic about the future, he is constantly being lectured by the informed realist who sees all the disasters that beset us.